Welcome to Willow Oak Asset Management's Value Hour. My name is Stephen Kiel. With me today is Dave Waters from Alluvial Capital. He's joining us for a special Berkshire Hathaway edition where we'll review the meetings, Buffett's comments, and other things like that from the 2020 Berkshire Hathaway annual shareholder meeting. So Dave, thanks for joining us today.
Happy to be here.
Yeah, I think a great way to start off here would just to get your takeaways, and I'd love to elaborate on those afterwards. But what did you think of the meeting?
So strange, wasn't it? Just an empty stage in that gigantic arena. Very different, but in a way interesting. A lot fewer distractions. No laughter or applause. Or Buffett loves a crowd, loves to play to a crowd, and he couldn't really do that as much this time. So we just kind of got more of the unvarnished, unfiltered stuff, and I enjoyed hearing that. I thought some of his comments about Berkshire Energy were really intriguing, and I was also really interested to hear about his buying and selling strategy when it came to the airlines. And so, yeah, we'll get into that a bit more here. How about
Yeah,
you?
I wonder if they could have added a laugh track or an applause track or something in the beginning. It was strange, right, to see him though in the auditorium, to not do it in a different location. And Becky Quick was doing her questions from home. You had Greg, Abel, and Buffett on stage there, appropriately spread out. And I think I saw one person in the audience there. But yeah, why do you think they ended up still doing it in the auditorium?
I'm gonna guess they have a long-term agreement with the arena, and maybe it was too late to get the deposit back. Who knows?
It made it for a surreal moment for sure, a
It really
surreal time
did.
period. And also starting later in the day, I don't think any of us expected the meeting to last so long. Starting at 4:30, 4:45 Eastern time, and it still went well into the night. What did you think about the monologue, the first hour, hour and a half?
I mean, if there's anyone who understands market and economic history, it's Buffett. I mean, number one, the guy is almost 90, so he saw a lot of the progress of the 20th century and saw it
Yeah.
firsthand. But it's always great to see someone who really takes the long-term perspective and makes the case so forcefully with so much data that there really is no better investment environment in the world than the United States. And even though we have our obvious issues, and especially now with the virus, that we'll get through it, and we will get to the other side, and we will still be a country of tremendously creative and ambitious people who will do incredible things. And that was cool to be reminded of that.
Yeah. It was interesting to see him use slides for the first time, and that's where you're reminded that he's an 89-year-old man. He has slides that are black on white, normal font and everything. And there was one where it was a source, W. Buffett's wild guess. That's what older people do. But there was another comment where he referenced Sam Nunn, some video on YouTube, and referred to the platform itself. You can see Sam Nunn on YouTube on this date. Well, somebody uploaded that to YouTube. It's kind of the way that you think about a grandpa or older guy referencing this technology. But interesting to see, Charlie Munger too apparently has been on Zoom. What he said. Yeah, along those lines though, once he did through that intro, and we had kind of a history lesson, quite frankly, during that time period. And the slides actually did help. So give him credit for that. And then kind of Greg Abel made an appearance. What did you think of that instead of Munger?
I mean, we have to be introduced to the next generation, don't we? We have to get to know these people, know how they think, see how they communicate, and how they relate to Buffett and Munger. So yeah, I was happy to see him up there.
Yeah, any comments, to hear really more on the operational business from Greg. It was good to hear the questions were different this year because they were more company, there's obviously some macro things, but a lot of company specific questions as well. As how it is when you go to the event, you get, kids come up there and ask for life advice and things like that, it has its place. And Buffett Buffett humors that, but I think he would like to talk about the company during the shareholder meeting, and it seemed like there was more of that here this year, especially with Greg there.
Hmm. No doubt. And I appreciated the candor about the fact that Berkshire is so gigantic that, yes, they can't help but have some businesses that are in rough shape in the
Yeah.
middle of this crisis. And it would have been easy for Buffett to say, hey, we're doing fantastic. We believe in everything we own. Everything's going to sail through just fine. But that's not the truth. And I appreciate his frankness about that.
He did make a reference too about in Munger's interview from the week before about some of these businesses may not open. Munger had made that comment. Buffett then referenced potentially closing or selling even some of those companies that might not, the subsidiaries that might not have kind of long-term potential for survival. That was the first time I really remember him saying that about a wholly owned business, and he compared it to the airlines. Did you pick up on that as well, or is that?
No, I saw that as well. And I agree. I think that was fairly new for us to hear that.
Yeah, and then of course into the airlines. What to sell them all within a short amount of time during April, to really make no new stock acquisitions in the month. I think there was very small, 450 million or so, and clearly it was Ted and Todd who did something like that. But what does that say for the overall markets here? What does it say? And what does it say for your investable universe, quite frankly, if anything?
Yeah, I think that Buffett has always had an insurance mindset that he gets into an investment and he believes in it. Obviously, he does, or he'd never get in at all. But he understands that we live in a world of unlikely but potentially catastrophic outcomes, and one of those, of course, is a pandemic. And so, no, I'm not saying that he should have foreseen it. That's impossible, but I think what he's saying is when something like this happens, you have to be able to react decisively. It doesn't pay to sit there paralyzed. You have to use the information you have, knowing that it's incomplete, knowing that the situation is fluid, and you have to make a decision. And later on, you'll find out if that decision was the right one or not. But I think he's saying that sometimes when things like this happen, you have to do something. And you can't just sit there, which is why it's so interesting then that this was one of the only transactions he made. One thing I thought was really, really interesting about the decision to sell out of the airlines entirely was he said, like, we don't trade around. He's not the kind of guy who says, okay, I don't like the airlines as much anymore. We're going to sell 15, 20%. And I was thinking about that because it really matches up with his mindset of thinking about ownership in stocks as an investment in a business. And I was thinking about how that might translate to an ordinary investor or entrepreneur. I mean, say you're the owner of a local restaurant or auto repair place, and you just decide that for whatever reason, looking ahead, you don't see a great future for this business. Are you going to try to find someone and say, hey, I'd love to sell you 20% of my operation? So I want to sell you 10% of my operation? No, you sell the whole thing, or you liquidate if that's what it comes to, but you do whatever you can to get out of that investment. And that was just intriguing to me that Buffett seems to be saying it's better to be all in or all out. And it doesn't make as much sense to do half measures and buy or sell a little bit. And that's what I think when he made the decision to sell the airlines, I think it was his decision to be all out.
It's an excellent point. That's an excellent point. And it shows how he treats the mindset of owning kind of the operating businesses that they own. He has that same mindset with the stock purchases. And it's a lesson for us as well, and all investors, that it doesn't always pay to trade around. If you've made a mistake, if you've acknowledged, if you want to go in a different direction with a particular company or industry, you can really get into a lot of trouble trying to shave it down or trade around it, or being kind of too cute for the investment, either go in or out in that way. And he was able, look, they sold the entire position, in 1 month. They blew out of it, which was pretty impressive, quite frankly. And there was some speculation that he was selling, and he had sold a little bit in March and had to report that. But there's some speculation he was selling in April, but I don't think anyone knew until the meeting that he had sold out of everything completely. So yeah, interesting approach. And a lesson, and also, I guess, a reminder for him to go back to his Kitty Hawk comments that if he would have been there to shoot the plane down, it would have saved investors a lot of pain through the last 100 years. Uh,
Yeah,
you know,
I respect his ability to evolve, but this particular instance that turned out maybe to be a mistake.
yeah, I was having a conversation yesterday, and he thought, well, maybe he should get a tattoo, on his arm to never buy airlines again. He somehow has to. And, it's interesting though, because the industry is different than it used to be. They have loyalty programs and they're revenue generators and things of that nature. It is different than it used to be, somewhat, a little bit,
Mhm.
but perhaps it's 80% is the same, where you do have a supply demand, you do have kind of a commoditized type things with some of these schedules, and when it seems like he realized uh, that some of his viewpoint about how it might be different going forward is maybe not as accurate. And he does have exposure quite a bit through the operating businesses as well.
Yeah,
Any
yeah,
other kind of
precision gas parts.
yeah, exactly. And any other thoughts on kind of the market as a whole that you took away from him, or any of his comments?
Again, I think Buffett, one of his most underrated talents is as an insurance executive. And he seems to be saying that Berkshire is going to be fine, of course, but I think they anticipate a need for liquidity for the foreseeable future. And so I think he was telling us to be not to expect to see that large chunk of undedicated capital sitting there to be put to work anytime soon.
Yeah.
He didn't come across as terribly optimistic in the short term, but he plays things close to the vest sometimes, and I wouldn't be surprised if he had plans or ideas or that he'll execute on. But he didn't give investors a lot of reason to go rushing in right now, I would say.
They originally had said they wanted to keep $20 billion as a buffer, an absolute minimum at any given time, given the potential for exposure and things like that. They have the insurance. They have 130, 137 billion, somewhere around there in cash right now, and clearly that $20 billion buffer is much. He thinks it should be higher than in the past. Any idea what what level he might be thinking, and how that might actually apply to some of the buybacks, or the lack of significant buybacks?
Yeah, lack thereof is probably more interesting. A concept. Yeah, he seemed to be saying that yes, even though the stock price of Berkshire is down, that there has been a decrease in its intrinsic value as well. And so I would be surprised to see a large amount of capital going to buying back shares, assuming we don't get this virus crisis under control in the short term. I think people who expect major fireworks out of Buffett in the near future should probably temper those expectations. I'd love to be proved wrong. I'd love to see him make some brilliant acquisition right now, and maybe he will. He's done it before, but yeah, it just seems like a quiet time for Berkshire until they really have a better idea of what that range of economic outcomes you mentioned narrows.
Yeah, and also you're in a situation where a company like Boeing, for example, just did a $25 billion bond offering. And ultimately, if you go a couple steps backwards, it's backstopped by the Fed. And I think it was at 5% interest. In a world that's different than today, they would have to go to a company like Berkshire. Perhaps they would have had to get bailed out directly, from Treasury, from
Mhm.
the government. But instead, they're able to do this massive bond offering to survive. And so, when you think about how it's different than an 08, 09 time period, where he was able to make those different deals with Harley Davidson, with like Tiffany and other companies that had great brands but short-term problems. Are they even able to, do they even need to go to Berkshire for help now, because they have assistance in other areas because of the Fed activity?
hmm You talk about too big to fail as well. I mean, that was the banks in last decade, and maybe that's Boeing today. I mean, aerospace is one of our nation's biggest competitive advantages, and it's just the whole value chain there employs maybe millions and untold billions of value. And I don't know if the Fed ever would have let Boeing get to a position where
Yeah.
they had to go to Berkshire. I mean, Tiffany's and Harley Davidson, yeah, good American businesses, but hardly systemically essential. And so maybe that's the difference.
Yeah, and you're not going to. I mean, Buffett would get a 10%, 12% coupon, and then also convertible or some sort of warrants or something like that. Um, actually, the situation they had with Occidental, he made a few comments on that. It always kind of makes me laugh that some of the questions that are posed to him are so aggressive, like the person asking feels like like you really screwed up. You're an idiot, for doing this. It's like, I have no idea, all the information that Buffett has access to. And, any thoughts on it? I don't know if you remember that Occidental question or some of his comments about it, but
I
just
do.
general energy sector in general too.
But honestly, it was a little bit of a dodge on Buffett's part. He didn't
Yeah.
really talk about what the questioner was getting to, which is he thinks he did something unshareholder friendly that'll make it more difficult for Berkshire to get deals going forward. I don't think Buffett is under any impression that it was a good deal or a deal he wishes he couldn't take back if he didn't have the opportunity. But I think it's remember, of everyone who lost money on that deal, Buffett lost the most. And so he's suffering along with everyone else in Berkshire and all the other individual investors of Occidental and Apache.
Yeah, and I think ultimately when you extend the time horizon, they'll be fine. I mean, if assuming it won't go under, doesn't seem like it will, then when you go 10, 15 years in the future, maybe he's getting a 6, 8% return on that instead of the spectacular return that he had anticipated. But you can only operate with the information you have at that particular time, and no one knows the risk better than he would have. So I guess I kind of close up. Love to hear any kind of final comments or takes, kind of final discussion points as uh, anything you're thinking about over the next couple of weeks that might apply to your investments or the market as a whole from the meeting.
I think every company has a life cycle, and the good ones have a long, long life cycle. And Berkshire is one of the good ones, but at the same time, companies change, and where they are in their life cycle determines what they do and what their goals are. And honestly, I don't think the Berkshire of today is the Berkshire of the 80s or 90s or even the early 2000s. I really do think Buffett justifiably views it as more of a wealth preservation vehicle that can still generate a solid return, 6, 7, 8% in real terms, in a tax efficient manner. But I just don't think that the size of the business, and Buffett would not disagree, I don't think, will allow them to earn that 15, 20% return on equity that we used to see.
Yeah.
I think you can see that in the investment decisions they're making. As I said, Berkshire Energy is gigantic. I think it's unappreciated what a significant portion of the business that Berkshire Energy is, and that's only going to increase. What did he say? They're going to put 100 billion to work over the next decade, and a lot of that is growth. It's not just replacing physical assets, and so that is just going to become a more and more important segment of the business. And the returns there are not mind blowing. I mean, you're making 10% return on equity, but they're also they're nearly guaranteed. They're regulated, they're stable, they're as stable as it gets, they're as blue chip as it comes. So I think we'll see more and more of that. And yeah, I mean, Berkshire is the place to be in any difficult economy, during any difficult environment. But if we do get a rapid recovery in the economy, we do get a return to bull market, Berkshire shares probably won't keep up, and that's probably not a bad thing if you're in them mostly to preserve your wealth. But yeah, that's my take.
Yeah, and the Berkshire Energy specifically, it allows them to just put a massive amount of capital to work, which is necessary given the balance sheet. And yeah, I think he even made the comment that he referenced to Berkshire Energy that this is a business for capital preservation. This is a way to stay rich, not to get rich.
Yes,
And yeah, I totally agree that that's the point where the company is at this time, which it is what it is, and there's a place for that in the portfolio, in people's portfolios, and that safety is attractive, and to be there to be opportunistic in really difficult times. This is kind of what we're waiting for now, right? You know, he made the comment, kind of a last question, I suppose. He made the comment in 08, 09 that he was 4 months early, 5 months early in some of those
Yeah.
transactions. You know, do you think this is applying here? That maybe this is why there hasn't been much activity?
He may remember the lesson that he could have gotten in at much, much better prices just by being a little bit more patient. But on the other hand, he's got even more capital to work with this time around, and it takes a larger deal to move the needle. And he might just end up being frustrated if that 25, 30, $50 billion deal doesn't come swing through. I mean, they did say that even if they could find something for $1 billion and it would generate a double for them over the next year or two, they'd do it. But he was said like that doesn't really change Berkshire's value that much. And so I've no doubt that they will do the deals they see, but they'll also exercise that patience they need. It's for them, it's about balancing their ability to put a lot of capital to work with the rate of return they would receive for putting that capital to work. And that I wouldn't want to have to make that decision. I'm much happier making these little decisions I have to every day.
Yeah, so the things in our portfolio are probably not going to be looked at by
Doubtful.
not only would it not move the needle for Berkshire, but you know, it might not even it's a rounding error going out several
Yes,
dozen decimal points. So
very true.
great. Well, thanks so much for joining us, Dave. It's great to hear your thoughts on the meeting. Always good to see you, especially, you know, we can't do it in person, unfortunately, but we can do it virtually here. It's good to catch up and hear your thoughts, and look forward to doing this again. Thanks again for joining us.
For sure. Thanks so much, Steve.
Thanks.